mistake. I believe all of us we do mistakes in our life. So what we do whenever we do a mistake, how we are responding to those mistakes. So the first thing is, which I believe we do, is we admit it, number one. Number two, we learn from it, we correct it, and then we try that these mistakes should not repeat again. So today, I'm bringing the same kind of theme in the new VAT law, the mistakes and its correction. I'm going to talk about voluntary disclosures. Voluntary disclosure means how you can file a voluntary disclosure with the FTA to do the correction of previously or historically filed VAT return. What is the procedures? What kind of penalties will be applicable? And I believe we have 30 minutes for this session. I have included approximately 18 case studies, so you have to be part of these next 30 sessions. Please be with me for next 30 minutes. There you will see 18 case studies, and after having these case studies, then you will be able to answer each and everything that there can be different scenarios into any companies whether voluntary disclosure is applicable or not. So what we are going to cover, this is the agenda. So first of all, we will go into the law, because I believe maximum of us are chartered accountants, so we know law, how to interpret the law. So firstly, 2-3 pages will be for law from tax procedure and actionable regulation. Then we are going to talk about the 3 different scenarios under which voluntary disclosure needs to be filed. And then we are going to discuss about the process. Then the last, penalty applicable in 3 different scenarios. Then, as I mentioned, 18 specific case studies will be there. And lastly, we are going to talk about the documentation required for voluntary disclosure. I believe we already know VAT has been implemented in 2018. All companies have seen a complete life cycle of last 5 years, implementing VAT into our companies, then filing returns. Maybe many of us has already seen the VAT refund process, or maybe few of us has already seen the FTA audit also initiated by Federal Tax Authority. One thing is very much common into refund audit, or let's say limited investigation by FTA. Many times you have seen FTA asking to file voluntary disclosure. So we will discuss a little bit in detail today that what this voluntary disclosure all about. On this page, you can see there are decree law of tax procedures. Then second, we are talking about executive regulations. Mr. Girish has already touched upon Federal Decree Law number 28 of 2022, and recently tax procedure executive regulation 74 has been issued. And then we are going to talk about 6 guides or private clarification which FTA has published, and they are specifically talking about voluntary disclosure. So you can see there are about 9 documents in which FTA is talking about voluntary disclosure. Voluntary disclosure, what is this? It's all about. So voluntary disclosure is nothing. It's a form prepared by Federal Tax Authority in which we have to fill this form. We need to notify that yes, I have done some mistake into my previous returns and I want to correct by myself. So this is a form which we need to file with Federal Tax Authority. The purpose is Federal Tax Authority wants to encourage that if you have done any kind of mistakes into your previous return, you do this correction by yourself. Then process is, first of all, the first thing is how to identify, how we will come to know about our mistakes into our previous returns. So some companies are going into historical data in the last 5 years, they review again that let's see what we have done in the last 5 years, because 2018 when VAT has been introduced, it was a new law, it was new for everything, even for FTA, for chartered accountant, for practicing, for industry, everywhere, it was new. Many times the wrong interpretation has been taken. So this is the right time where companies should look into the historical return and they should see that if we have done any mistake, if yes, then we should file a voluntary disclosure. So first step of this process is, first of all, identification, then quantification. Why quantification is required? You will see in upcoming pages that for each and everything, FTA is not asking for filing voluntary disclosure. I can give you a very small example. If you have done any mistake in 2018 or 2019 return and payable tax amount is 5,000 dirham, you are not required to file a voluntary disclosure. You can correct those mistakes into your upcoming return. So we will go in each and every topic in detail in upcoming slide. Filing, there is a separate dedicated form which is form 211. We should submit, we have to submit on FTA portal. Then disclosure, when we are going to submit this form onto FTA portal, we have to attach one letter. In this letter, we have to mention that why we are filing voluntary disclosure, what is the error, what is the quantum of that error, and how it is going to impact my VAT return. And timeline is there. As soon as the company is with identification of this mistake, then we have 20 business days to file this voluntary disclosure. And this, we will go into detail in penalties. There are three kinds of penalties is always applicable whenever a company is filing a voluntary disclosure. Number one penalty is because you have filed a wrong return previously, you have to pay a penalty, which is fixed penalty. And then additional two penalties are percentage-based penalty. Percentage-based penalty is for filing a voluntary disclosure. We will go on detail that it is applicable 5, 10, 20, 30 and 40% of the penalty based on when you are doing correction. And then third penalty is for delaying. So these three penalties are applicable upon your filing voluntary disclosure. These are the three areas where companies are required to file voluntary disclosure. In 2018 to 2022, let's say if I have done any mistake into my previous returns, and if my payable tax was more than or less than in comparison to it would have been, in both cases I need to file a voluntary disclosure. Case number one, my return was wrong and the payable tax was either higher or lower. So in both scenarios, I have to file a voluntary disclosure. Second, where there is no impact. I have filed my return, there is no mistake in this return, there was no payable tax. Let's say in 2018, I was not able to recognize import of service, and we know that for import of service, it's an accounting entry, you have to just show into your VAT return. There's no VAT impact, it's VAT neutral. But again, FTA says that you have to file voluntary disclosure. Then third, where we have submit a wrong refund application with FTA, and if there is any difference in amount, we need to file a voluntary disclosure. We will go in very much detail. Okay, this is for all of you directly from law. It's copy paste from the law, tax procedural law 28 of 2022. If you see this slide, there are 6 points on this slide. Point number 6 is talking about whatever is mentioned above in executive regulation. We will talk about in detail. So don't go into point number 6. 5 points are talking about different scenarios. Point number 1, point number 3, and point number 5. 3 points are talking about tax returns, and point number 2 and point number 5. Point number 2 and point number 4 is talking about VAT return. So now we have 2 scenarios. Either I have filed my wrong return, or either I have submitted wrong refund application. So whenever anybody will ask me for voluntary disclosure, there can be 2 scenarios. Either my return is wrong or my refund application is wrong. Okay. Then point number 1, what is it talking about? If you have submitted your return with some error and the tax payable amount was less than in comparison to which it would have been, that means you have reported less tax to the FTA, then you shall submit a voluntary disclosure. We all are chartered accountant, we have to see a differentiation between shall and may specifically. This is a tricky area that where you will see somewhere shall, somewhere must, somewhere may. So first, where I filed my return and there was some error into the return and I have reported less tax to the FTA, I shall submit a voluntary disclosure. Point number 3, I am not going into 2 because point number 3 is related. Tax return, I have filed the FTA, there were errors into the return and I have deposited more tax to the FTA. Then FTA says that you have to file voluntary disclosure. But you will see the word may. Then you have option to file voluntary disclosure. I can give you one example. My company is located into one designated zone. I am providing international transportation related services. And from 2018 till date, I was charging 5% VAT to my customer. And today I realize that it is zero rating. So, question is, I have over-reported my VAT. I have collected extra VAT from my customer, I have reported to FD. What is the option available? Whether I should file a voluntary disclosure, or I may file voluntary disclosure, or I can collect into the next return. There are a lot of confusion that in this specific area, you cannot collect into the next return. Because point number 3 says that if return has been filed, even though you have paid extra tax, if you want to correct it, it's your choice. Please go ahead and file a voluntary disclosure. Point number 5, Mr. Girish has already mentioned in the presentation that FTA has come up with some changes which says that even though there is no change into payable tax, and if there is any mistake into the return, you have to file a voluntary disclosure. You will see the word must file a voluntary disclosure. I think someone has asked question that why, even though the payable tax amount is nil, there is no difference in the payable tax amount, there is why we should file a voluntary disclosure. Let's say Emirates wise reporting. I believe we know that whatever tax we are paying to the FTA, it is going to federal tax actually. It is not going to Emirates. And after that, these tax will be divided into different Emirates. So let's say if you have company all over in all the Emirates and you are reporting everything in Dubai. So how FTA will come to know that whether there is a proper division or not? For these kind of specific cases, FTA has mentioned that you have to file a voluntary disclosure. There is no any other option available. Point number 1, point number 3, and point number 5. These all 3 points are in relation to VAT return. Clear? For sure, there are some 30 slides are there. We will go into detail for each and every point. Then point number 2 and point number 4. This is specific cases of tax refund. It says that whenever you are submitting tax refund application and there is some error, you have claimed more refund from FTA or you have claimed less refund from FTA. In both cases, voluntary disclosure is there, but at one place you will see that you have to submit a voluntary disclosure, point number 2, and point number 4, you may submit a voluntary disclosure. In point number 2, where you have claimed more refund from FTA says that you have to correct and you have to file a voluntary disclosure. But point number 4 says that if you have claimed less refund, then FTA has no one. It's your choice. If you want to file a voluntary disclosure, you want to claim more refund, go ahead, file a voluntary disclosure. 5 months. Then this is executive regulation. You have seen point number 6 was talking about that, don't worry, there are more procedures and provisions will come which will give you more idea that how to file voluntary disclosure, more rules and regulations. This is the executive regulation. Executive regulation, point number 1 is talking about VAT return, point number 2 is talking about VAT refund. So if you see point number 1, it is saying that, okay, you please connect this point number 1 with the previous 2 points, point number 1 and point number 3 and point number 5, where I was saying that in case if you are doing any mistakes into your previous return, you have to file voluntary disclosure. But FTA says, not worry. FTA is there to help you out. If payable tax amount is more than 10,000 dirham only, then you need to file a voluntary disclosure, or for each case. And tax refund case, they are saying that if there is any mistakes into tax refund, there is no limitation of 10,000. And third point, I think we have discussed that where there is no tax due, there is no difference in the tax amount, let's say import of services, import of goods, or export of goods and services, where we shall submit a voluntary disclosure. So I will take you to the next slide because I have designed that everything is covered step by step. So again, this was just to give you a snapshot of decree law and executive regulation. So these are the cases. So first of all, left hand side we are talking about decree law, right hand side we are talking about executive regulation. First of all, we are saying that where we have filed incorrect return and payable tax amount was less than which it would have been reported. So in this case, what we are going to do, we have to check if the differential amount is more than 10,000, then only we are going to file voluntary disclosure. If the tax differential amount is less than 10,000, then we are not required to file a voluntary disclosure. And on the bottom you can see payable tax is more than it should have been, then you may submit a voluntary disclosure. There is no difference between executive and executive regulation. So if you see this slide, what FTA wants to say that if you have underreported your tax, where you have underreported the tax to the FTA, then you have to see that what is the differential amount. If the differential amount is more than 10,000 dirham, we have to submit a voluntary disclosure. If it is less than, then again you have to correct into your next return. But in case if you have paid extra tax to that, then no worry. If it is your requirement, if you want to file, you can. Or if it is not required, like the example which I have shared, which I have given, that there is a designated zone company who is providing any sort of services or any goods where it was zero rate, but I was showing standard rate. So today I came to know that it was zero rate supply. Whether I need to file voluntary disclosure, the answer is no. It's on me. If my customer will say that, okay, because you were charging long back to me, even because of you, my rate there are mistakes into my return, then I will think and I will decide. Company has to decide whether they are going to file a voluntary disclosure or not. So just again a summary, if there was a mistake into the return and if I have underreported that, then I will see that it is less than or more than, and then accordingly I am going to decide whether voluntary disclosure is required or not. But in case if I have overreported, then it is on me, it is on company decision whether I will decide to file voluntary disclosure. So first scenario we have seen where my returns were wrong, there was some error into my returns. Second scenario where there is a submission of So second case where I have submitted a refund application with the FTA and there is a mistake into my refund application. So again, after that degree law, right hand side executive regulation. If you see almost same degree law and executive regulation. First scenario, if you have claimed more refund from FTA, then you shall submit a voluntary disclosure. But if you have claimed less refund into your application, then you may submit a voluntary disclosure. And third scenario which we have discussed, that if there is no difference into tax payable amount, then it is on company choice. If there is no difference into VAT amount, then it is a compulsion to file voluntary disclosure. We will see some case studies in further pages. Penalties. Okay, this is very important question. Okay, FTA is saying that we want to welcome whoever want to file a voluntary disclosure. So ideally, if you are asking companies that, okay, come, if you have done any mistakes and if you want to correct those mistakes, then file voluntary disclosure. But whether penalties is applicable, the answer is yes. Any company who is filing voluntary disclosure, three kind of penalties is applicable each time. The first penalty is for filing the returns with errors. It is a fixed penalty. Every time 1,000 or 2,000. First time you will get 1,000 penalty. Every next time we are going to get 2,000 dirham as a penalty. And in case if there is no difference in the amount, which I have mentioned like import of services, there is no difference in amount, then the fixed penalty will be 500 dirham. Second penalty, voluntary disclosure penalty. There can be two scenarios. I am filing my voluntary disclosure penalty in case FTA has not initiated my audit. I am going by myself to the FTA and I am submitting my voluntary disclosure. So the penalty would be 5%, 10, 20, 30 and 40% based on year when I am filing this voluntary disclosure. Let's say I have identified any mistake of my historical return of 2020. So if I am doing submission of this return in the fourth year of error, then fourth year of penalty would be applicable 30%. 30% of the base value of the or the tax amount. Let's say if mistake was 100,000 dirham, VAT was 5,000 dirham. This 30% would be of the VAT amount. Then in case FTA came for the audit, FTA has sent some notification of audit to us, and then I realize that okay, I have done some mistakes, and if then I am doing any correction or if I am filing a voluntary disclosure, then the penalty percentage will be different. Fixed penalty would be applicable, but VD penalty would be 50% upfront and 4% per month from the day of the error and the day of filing. Let's say if I am doing any correction of 2019 or 2020 return, then from that month till date, 4% per month penalty will be applicable. Then late payment penalty, FTA says that okay, you have identified your mistakes, you are filing your voluntary disclosure, pay the VAT within 20 days. If you are paying within 20 days, then there is no problem. No late payment penalty would be applicable. Right? If company is not paying within 20 days, then we have to pay additional late payment penalty, which is 2% and 4%. And I think it's maximum up to 300% of all total pay. I think time is less, I will not go into. So this is now case study. Now I think all of you are speakers. I will listen from you. 18 case studies are there. After having these case studies, I think each one of you will come to know that whether voluntary disclosure is required for each case or not. So first, company XYZ taxable person has made scrap sale amounting to 20,000 dirham in the month of November 2021 and not reported into the VAT return. So tax amount was 1,000 dirham. What we should do? We should file voluntary disclosure. We should do correction into our next return, or we may submit a voluntary disclosure. No action required. Shall submit correction into the next return. Yes, it was easy. Next, I think more or less same example. We are talking about now the amount has been increased to 20,000 to 200,000. VAT amount was 10,000. Whether we need to file a voluntary disclosure? No. It is saying 10,000 or less than you can correct into the next. Third, for same 250,000 dirham, VAT amount will be 12,500. So we shall submit a voluntary disclosure. Example was almost same. Question number 4. Company XYZ is a taxable person has made sale considering zero rated sales of services at standard rated sales amounting to 70,000 dirham. VAT impact is 3,500. And then what measure we need to do? So it was zero rated supplies, and I was considering standard rated. I think I have covered this example a few minutes back. So what measure we should take? Sorry? May submit because you have overpaid, you have already paid excess VAT to the FD, so it will be your discretion that if you want to file a voluntary disclosure. Then company XYZ is a taxable person has made sale considered zero rate sale of services. Okay, 5. So example is say 500,000 we are talking about. So 25,000 dirham. Whether we can correct into the next return, or we may submit a voluntary disclosure, or we shall submit a voluntary disclosure. Again, because you have paid extra VAT to the FDA, so it's your discretion if you want to file a voluntary disclosure. Now, if you see this question number 6, company XYZ is a taxable person having monthly VAT return submission with FDA, procure goods from US supplier with VAT amounting to 15,000 in cash during the month of January 2023. And tax invoice has also received in the same month. The company has not recovered input VAT for such transaction into the tax return for the period of January 2023 or in the next year. So this story is, I have received my supply from, and I have received invoice, but I forgot to claim input tax credit. What options are available? Whether we need to file voluntary disclosure, we may or we can correct into the next return. Can we correct into the next return?
Yes.
Sure. This was the exact.
Anyways, you are going to.
This was okay. Quickly. There was the low. Okay. Point number 3. If a taxable person becomes aware that tax return submitted to the authority or tax assessment issued by the authority is incorrect, which resulted in the calculation of paper tax according to a tax law being more than it should have been, the taxable person may submit a voluntary disclosure. Why I am saying that? Why you cannot correct into the next return? Because executive regulation is not talking about correction into the next return. Because if you see the point number 1B, Point number B, 1B is talking about that you can do a correction into the next return, and it is applicable only when the return was low and you have paid less tax. If you have paid more tax to the FTA, and if you want to do any correction, you cannot do into the next return. So this question number 6 is clear that if we want to clean this, we may submit a voluntary disclosure. So choice is yours, either to file voluntary disclosure or you cannot do it because you have paid tax or you have claimed less VAT from federal taxes. 7. Company XYZ is a taxable person having quarterly VAT return submission to the FTA procure goods from US supplier with VAT amounting to 6,000 in cash during the month of June 2022 and tax invoice was received as a thing. So same question. We are talking about VAT is 6,000. So what I am trying to say, where we have claimed less tax from FTA in any return, whether there is a difference of 6,000, 10,000 or more than 10,000, there is no compulsion of filing voluntary disclosure. Or you cannot correct into the next return. There is only one option available. If you want to correct those, you may file a voluntary disclosure.
Question number 8. Company XYZ is a taxable entity requiring to submit a monthly VAT return. The company extended a loan of 10 million to its group companies in Singapore with annual interest of 10% in the month of Jan 2023. In Jan 2023, we raised a debit note for the whole year and company has not included into the VAT return. What is the answer? I have one group company, I have given a loan of 10 million, there is an interest of 10%, I have raised a debit note. So the first thing is, it is more related to, first of all, what should be the VAT applicability on this transaction. So Article 31 Executive Regulation says that if you have any kind of interest income from outside UAE, it should be covered under zero rated supply. So in this case, I have not shown into my VAT return a zero rated supply, even though there is no VAT impact. What I should do? What are the options? May submit a voluntary disclosure, correction into the next return, shall submit a voluntary disclosure. So there would be a lot of scenarios in every company where there is a mistake into import of goods, where there is a problem into export of goods, import of services, export of services, which is VAT neutral. If you will be doing any mistake in those areas, the only option which would be available is filing a voluntary disclosure, and we shall submit a voluntary disclosure. It's not may, it's a compulsion. Company XYZ received invoice from its holding company in India for royalty fees amounting to 500,000 during the month of March. Company has not considered into the VAT return. It has not been recognized into reverse charge mechanism basis. So again, I'm explaining again and again, import of services. If there is any mistake which is VAT neutral or there is no tax payable or receivable amount, then you have to submit a voluntary disclosure in this case. Question number 10. Company XYZ receives invoice from its parent entity from Hong Kong for management fees amounting to 10,000 dirham, where VAT amount would be 5,000 dirham, and XYZ has not included into reverse charge. So because there is no VAT impact, so you have to file a voluntary disclosure on any mistake into the import of services. 11th, company XYZ LLC import goods amounting to 1.5 million in the UAE mainland through custom in Jan 2023. The said import was not auto-populated in box number 6. Then if because of any reason it is not coming onto my portal, then ideally there is a way FTA has suggested that I should go into an adjustment if I know that this is my import and I have not done any kind of adjustment. So what I need to do? Because some companies has simple approach. If whatever is coming on my portal, I will show as an import of goods, and I will not go into my custom portal. I will not do reconciliation. FTA come with the solution. Don't worry. If you are doing the same process, then later on you have to file the voluntary disclosure for those corrections. 12th, company XYZ LLC import goods amounting 100,000 in UAE mainland through custom in Jan 2023. The same. So example is same. The only thing what I was showing that even though whatever is the VAT impact, because in this example, it's 5,000 and either above, it will be more than 10,000, but it is VAT neutral because as soon as it is coming onto the FTA portal in box number 6, you can claim input tax credit. There is no payable tax amount, but in both scenarios, you must submit a voluntary disclosure if you have done this mistake. ABC and XYZ are two registered taxable persons located in UAE. Both our entities are related by having common shareholding by more than 50%. ABC has made a sale of 500,000 to XYZ in June 2019, considering as a out of scope transaction. Further, during Feb 2022, both made a VAT group, and during the review of next review, they found that it was a standard rated sale. See, this is a technical query. So earlier there was two group company having individual TRN number. One company has made a sale to another, 500,000, 25,000 dirham was VAT. VAT has not been recognized in any of the return, and later on they made a tax group. So today, it was, first of all, we have to see it will fall under which case. Case number 1, I have underreported. Then I will see calculation, whether payable tax amount is more than 10,000, the answer is yes. So I will conclude that I need to file a voluntary disclosure. But how? Because now these both individual TRN number has already been suspended. You will see only group TRN number. So whether you need to file a voluntary disclosure under group TRN number, the answer is no. As soon as you will log into Imaratex portal, there would be two suspended TRN number, and you can go to the suspended TRN number and you can file a voluntary disclosure into the previous suspended TRN number. But you have to file a voluntary disclosure because it is falling under case number 1 where I have underreported VAT, and underreported VAT was more than 10,000 dirham. I will take up all the questions. Actually 30 minutes are way less and I have few more slides. For sure I am here. I will take all the queries. Company ABC is a taxable person with monthly return submission. ABC recovers input VAT of 550 dirham on purchase of raw material amounting, I have purchased a raw material of 11,000. VAT was 550 dirham. I have received invoice. I have claimed into the same return. But the same month I came to know that some of the material was defected. I have returned. I received a credit note of 250 dirham. But what I have done, because by claiming input tax credit, I have claimed 550 or whatever input credit note I have received, I have shown into my sales. What is the answer? So there is no VAT impact, understand. Ideally, what would have been, I have to reduce from my purchase. But in spite of reducing my purchase or in spite of reducing from my input tax credit, I have shown this credit note into my sales. Even though tax is neutral, but we need to see whether there is a tax impact. There is no tax impact into this example, because two things, if you are reducing from your input tax credit or you are showing into your outward supply or VAT payable, so there is no VAT impact. If you see, if you are reducing from below box number 9 or 10, or if you are showing in box number 1, there is no VAT impact, but you must submit a voluntary disclosure. ABC is a subsidiary of German entity and registered with the FTA in 2019. I am paying management fees. So I think I have already covered. It is an import of services. If for import of services, I am not showing into my return, there is no any other option. You have to file a voluntary disclosure. There are many companies in UAE who have not considered these kind of transactions, specifically when we are paying royalties to outside UAE, when we are paying management fees to, even though tax is neutral, there is no payable tax. For each and every mistake, we have to file a voluntary disclosure. So what kind of penalties can be applicable? First penalty, 1,000 dirham, 2,000 or 500, because there is no payable tax, 500 dirham, I will be paying fixed penalty. And second, percentage-based penalty would not be applicable because there is no tax difference. So only by paying 500 dirham to the FTA, you can correct those mistakes. XYZ is a 16th. XYZ is a UAE-based entity registered with FTA and obligated to submit quarterly return. XYZ procures goods from a tax-registered person in UAE in the month of September 2022 with VAT 10,500. The tax invoice was received in the month of September with the agreed due date of payment within 90 days. XYZ has recovered the input of the same in their quarterly return. However, till date payment has not been made. I believe this will also be applicable to so many companies. Understand, I bought some material, VAT amount was 10,500, I have claimed input tax credit because VAT law says that if you have received the input invoice, taxable invoice, and you have intention to pay within next 90 days or 180 days? 90 days, 180 days. Then you can claim input tax credit in the same quarter, but till date you have not made the payment. Then ideally, because you have claimed extra VAT from the FTA, then it will again fall under number 1 and you have to file a voluntary disclosure. We have 10 minutes, more than enough, no worries. Okay. XYZ is a taxable entity requiring to submit quarterly VAT return, and recent VAT return is due for submission for the period of May to July 2023 in the month of August. XYZ recharge expenses relating to translation from its overseas related parties by issuing debit note during the month of June 2023 amounting to 10,000 dirham. VAT amount was 500 dirham. Considering these are out of scope. So if you see this transaction, we are recovering translation expenses from one of my subsidiary or related party from outside UAE. The transaction is 10,000 dirham. VAT amount is 500 dirham. Whether, first of all, the first question is whether VAT is applicable, because Article 31 Executive Regulation says that export of services, if any of your customer which is outside UAE and you are not providing any service in relation to personal mobile asset, it will be zero rated. So this transaction will fall under zero rated supply. And if you have forget to show any zero rated supply where there is no tax impact into the return, you have to correct by filing voluntary disclosure. There is no any other option available. 18. ABC is UAE-based company registered with Federal Tax Authority filing quarterly returns. The company had a distributor in Oman which used to recharge rental for storage of products lying with them. The company had paid a rental of 10,000 dirham. The VAT amount can be 500. Every year in Jan 2018, 19, 20, 20 respectively, the company considered payment related to these overseas vendor as an import, and we have shown into import of service as reverse charge mechanism basis. So if you see this case study, it is talking about rental services, and VAT law says that place of supply is very important whenever we are defining the taxability, because this overall transaction is talking about the rental services. So ideally, the supplier in Oman should charge VAT to us, and because the place of supply from UAE VAT law perspective, the place of supply is outside UAE. And if the place of supply is outside UAE, no UAE VAT law is applicable. So you should not consider as a reverse charge mechanism. And if I have done so, and there is no VAT impact, still I need to file a voluntary disclosure. I shall submit a voluntary disclosure in this case. Okay, time period for record maintenance. I think, first of all, Article 79 of New Decree Law 18, which says that if you want to file a voluntary disclosure, you can file within 5 years. If you have seen your Emarat Tax portal, if you want to file a voluntary disclosure of 2018, this option is not available. You cannot file a voluntary disclosure for, let's say, first or second quarter of the period, because it says that if you can file a voluntary disclosure within 5 years. And we know that maintenance of books of account, I think Greece has already covered that we have to maintain books of account for 5 and 7 and 6 and 8 years. Why left hand side and right hand side talking about two different things? In case if we are filing, generally we need to maintain for 5 years, but if we have filed the voluntary disclosure in last 1 year, then we have to maintain the books of accounts for next 1 more year. Documentation, first of all, to file a voluntary disclosure, form number 211, we have to attach a letter. This letter should specify what kind of error and mistakes or omission we have done into our previous return, what is the exposure, that means what is the quantum of this, and how it is going to impact the boxes of the VAT return. It should be part of voluntary disclosure. And then provided somebody. This is the only thing which we need to submit to the FTA, and FTA can ask any point of time to submit the Excel sheet, transaction-wise details of your previous return and the new one which you are going to prepare. Okay, so now because today there was two topics, one was the voluntary disclosure and second was VAT refund. If we have 5 minutes to cover it, sorry, or should we take Q&A? Sorry, I have taken much time, but okay. So should I cover up? Okay, great. VAT refund. I think company, there's nothing new to tell that, you know, what is VAT refund. We know that if output is less than input, a company can submit a VAT refund application with the FTA. Then time frame, as soon as we submit a VAT refund application with the FTA, FTA has 20 business days either to accept or reject a refund application. I have never seen any rejected refund application. So more or less they are accepting a refund application, but the actual story starts from there. The first thing which FTA can ask us to provide the transaction-wise detail. Let's say if we are doing submission of our refund for last 5 years or 3 years, they can ask us to provide the transaction-wise detail into the format designed by FTA, wherein they can ask us to provide the details for sales, purchase, import, export, out of scope. They can ask us to provide the trial balance. FTA can ask us to even share the bank statement to verify that whatever refund you have claimed, whether this is correct or not. Yes, this was the exactly VAT process refund, VAT refund process I was talking about. So FTA has very simplified process. FTA will take 20 working days to accept or reject. Then first of all, we have to go into the FTA login portal, Imara Tax portal, and we have to submit the refund application. First thing which we need to attach our IBAN, bank account number and IBAN certificate needs to be attached. Then FTA will take 20 working days to accept or reject. Then documentation, it varies on, you know, how much refund you are going to file. It depends on for how many periods you are filing refund. Sometimes they will ask you to provide only 10 transaction detail, let's say top 5, last 5 or top, you know, top 5 import or top 5 export and all this stuff. But sometime if the refund amount is high or your company is falling under high risk profile category, then FTA can ask you to provide the transactions detail for each and every transactions. And then we need to submit to the FTA, and further they can ask you to provide the trial balance and which should match with your VAT return. And if it is not matching, this data from books of accounts and VAT return is not matching, then we have to provide the reconciliation statement and we need to justify the reason for differences. Then I think how to get the, I think someone has asked question that, you know, on the FTA portal there are some problem, we are not able to see VAT refund, sometime it takes a lot of time to follow up. In general scenario, some companies are receiving refund on month and quarter, there is no issue at all. But some companies, even they are struggling for years for VAT refund. So there is some gap either into the understanding, maybe whatever FT is looking for, maybe we are not able to provide the exact into the same format, or whatever FT is looking for, maybe we are not able to require. Like today, one case which happened with my client, client has filed a VAT refund. They were receiving a lot of emails on the registered email ID and the person was on leave. So somebody has not seen this email, and for last 1-2 months they were chasing us, for example. And today we came to know that FT has sent a lot of emails for this VAT refund and they were not aware. So lot of scenarios can be happen due to which maybe you are not getting a refund. But FT has intention to pay refund, always. Industries eligible for VAT refund, I believe we chartered accountant, everybody, we come from consultancy industry. We know now industries, many of the industries in UAE are zero rated. So aviation industry, flight catering companies, duty free shops, labs, pharmacy, hospital. And then if a company is into third port shipment only, then all companies are into designated zone, specifically who are doing business into the goods, not into the service. Then tour and travel companies, oil and gas company, real estate companies, specifically residential. All these industries can be zero rated always, and they can be into refund position. Quickly in last 1 minute, what probable or possible question or objection FTA can do into your VAT refund process? The first question FTA can ask you that whether you have claimed any blocked input tax credit. Next question, not in Abu Dhabi but in Dubai, FTA asked that have you claimed any input tax credit on the insurance of your family members? Then FTA can ask you to provide the documents. I think someone has asked that whether FTA can ask to provide the detail or the proof of every invoice or credit note. The answer is yes. This is their authority, this is their jurisdiction. They can ask us to provide any invoice, any number of invoice. I have seen same example for one client. They have asked only to share 10 documents, and the similar size of company they have asked to share 10,000 invoice. So both kind of example we have seen. Apportionment, input tax apportion method, whether if you are doing mixed supply, taxable and exempt supply, whether you have applied the apportionment while claiming the input tax credit. Then as I mentioned that we should be having the proper reconciliation between the books of accounts and the VAT return. There can be so many reasons why there is a difference. If one simple example is advance received. If I am receiving advance in my company, this is not revenue if I am following IFRS. But for the VAT perspective, I have to pay VAT always in advance. So always there can be a difference between these two data, and I need to prepare a reconciliation. Anything else? Probable question, reason for difference in VAT return filed and shared Excel sheets, clarification regarding any out of scope supply, specifically for designated zone company. If we are not, because this situation can happen when there is a difference between my books of accounts and my VAT return, because I have shown some out of scope supply. So FTA can ask me to share the contract copy, and sometimes they can ask me to justify why you have not applied VAT onto this transaction. They can ask me to share any ledger, purchase, sales, import, export ledger. FTA can ask us to share for refund process. And I think employment agreement or any kind of agreement we have with supplier or customer, FTA can ask us to provide during VAT refund file. Yes, sorry I have taken much time. Thank you very much for your patience. And after this session, even we will be having Q&A session. If anyone of you have any question in relation to VAT refund or specifically onto warranty disclosure.
The limitation of time, we'll do the